Hello, traders. I'm gonna talk a little bit about using the tick to, anticipate potential areas for the next trading day or intraday trading, and to understand what they're telling you and how to profit from them. Okay, and basically, we saw Friday morning responsive selling. We had a negative 80 or 90 tick early in the morning, and two times we came up to that and found responsive selling. So what's that tell us? That tell us that at least in the short term, that buyer or people who were uh, uh, willing to sell, even at a negative 89 tick on Friday, they were willing to take their profits and get out of the way of the major news events coming in for the weekend. So just keep that in mind. So you look at that time frame and then you compare that to the SPY, okay? And then also I want to point out, like at 1 o'clock in the afternoon, the ticks just started falling off the cliff for the day, okay? So now if you go over to SPY and you do a little bit of comparison here, see like here that was 11:30. So you got 11:30 and 1 o'clock. Oh. And then if you look at your SPY here, and I'm not going to change it over to candlestick. We'll just leave it like this so it looks a little bit more clear. 11:30, we had that little bounce, and then we had that sell off. So this tells us right here that this area right here, this prior high from Wednesday night close, that's become a area that the markets are willing to sell at that point, considering that's one, two times Friday. We coming into Friday and we found responsive sellers right below this point right here. So just keep in mind this area has to hold, otherwise you find some responsive sellers from that point lower. Okay. And then what I also pointed out, 1 o'clock, so that's 1300 right here. You saw the ticks really start coming in. But what happened to SPY? Went up. What's this called? That's called a short squeeze. So all of this run up into Friday close is on a normal, without major event risk like we have. Normally, this would be sold back into the following morning. Okay, so we do have quite a bit of risks coming in to Monday that the markets are going to have a responsive sell just because of the massive short squeeze into the close. Okay, and now if you look at the tick cues, okay, and same deal here. You look at your time frames. 11:30, we found some responsive selling there, and basically every time you get a negative 400 tick or negative 400 uh, or positive 400 tick, that's to me that indicates major institutional movement into the markets. Those are extreme moves based on typically higher than normal volume. Okay, and we did manage Friday. We did cross below the negative 400 side. Okay, we didn't do that on the upside, and we saw how the markets were going Friday. So we hit what basically that's indicative of a short squeeze. Okay, and unlike the SPY, we did catch a little bit of responsive buying into even into the close on our ticks, but we did get some weakness around what is that 3 o'clock? Found a little bit of weakness, but the Nasdaq was holding up better going into the weekend. But yeah, 11:30, that was our tell that that was acting as resistance coming into Friday. And if you go over to your cues now, okay, and you see what happened 11:30, that's also that closing high from Wednesday night on the cues. So basically, we start breaking this Wednesday high area coming into the first of the week. We are going to probably have a slew of selling pressure coming into the markets. since the event with risk is over with. Okay, just wanted to point that out, that possibility, and we had a yeah had a little dip, but this one here we're not seeing that squeeze pattern quite setting up for the Qs on the close there. Now I do want to also point out on the SPX. Well, you can use SPY. Well, we'll use SPX. 1 second here. Okay. Basically, the SPX, these contracts right here, it's showing 2 days, but there's only 1 day actually. It's actually including Friday, I believe, in the counter. But these expire Monday. I'm pretty sure that's the case. And they're expecting a $47, almost a $48 move in the S&P futures for 1 day. They've already priced in my opinion, on the bullish side and the bearish side, the option makers have already priced in the entire expected move because we had such a massive move this week. They've already priced in the move for next week. So trying to buy options into this news event after it's all been priced in already, it's a high risk, low return scenario going into this big event that's happening this week. And it's more likely for Max Pain, for option buyers, that the market makers are going to pin price closer to tomorrow's open than they are to try to trend the markets. They're going to at least let Monday bleed off all this premium, and then the big boys in New York and in Chicago, they're going to keep all the options, the premium they took in. They want those things to keep their premium. So they're going to do their best to pin prices as close to the open as possible, in my opinion, because it's not in their advantage to allow prices whenever the implied volatility is so high. It's never into their advantage to allow prices to float freely. So that's, you would think the markets have a free moving system. Well, in theory, that's the case until volatility on short dated options are really jacked up, and it's then in the best interest to the option makers to do their best to pin price into make sure that prices don't get away, and make sure their options expire out of the money. So just something to think about. We're coming into the first week. Everybody's expecting this great, big, huge move. And I had planned on putting some straddles on until I saw that the S&P, they had totally and completely already priced in the expected move. And if you put a straddle on with a 47-point expected move in the markets already priced in, there's this no upside. See, they're already pricing in the 2811 or the way down here at the 2680. That's the kind of move that they're expecting here in the S&P futures. And to be honest, we've had quite a bit of trading in this range in the past. So I can see them at the worst case, they're probably going to pin price around the 2730 area for for tomorrow, and make sure those options expire the best they can out of the money. Keep that premium in the big boys' hands. Well, that's all I got to say. Hopefully that'll help you guys out, and it is a good theory, and we'll see how it all plays out tomorrow.